what's the best market condition for stuff to get done? I mean, my guess, and I'll just field it or give you the answer that I think is like the least like low volatility is what I would guess with pricing. And I've always wondered how like when someone signs a PSA or a MIPA agreement or something, and then natural gas prices drop whatever 30% or oil prices. I mean, how do you navigate those types of situations? And do you agree that volatility being low is probably when the things get done usually, or what are your thoughts on that?
Yeah, definitely. I mean, volatility, kills the A&D market, acquisition and divestiture market. If the crude oil and natural gas can trade kind of in a range bound band for a period of time. There's consistency there. It's easier to get deals done. It's easier to get buyer expectations to match up with seller expectations. The volatility is difficult. I mean, there's times where we're engaged by a seller when the price of oil is $80 and they're excited about they've run the economics, we've run the economics, our engineers have taken a look at it, and we kind of give them an estimate of what we think the asset will sell for. And then come bid day, it's $67, and they're like, well, this isn't what I signed up for. They may be getting great offers in the current conditions, but they're not necessarily that wasn't how they expected things. So it's kind of that part of it. I would say that the consistent less volatility. There does seem to be if there's a slow gradual incline on natural gas prices or oil prices. It seems to be a lot more optimism in the industry, just on people leaning into their bids as much as they can.
How much does like what the banks are doing and the financing situation impact the A&D market for you guys? Like if banks aren't lending or if you see like trends there, does that roll through to see more deals getting done? Like if banks are saying, hey, we're going to do more reserve based lending versus, hey, we're pulling back on this, does that impact you guys?
Yes and no. I mean, the volume of deals that we're doing, I would say that a lot of buyers and investors that have been in the space that aren't new buyers that have been in the space have been buying assets for a long period of time typically have a great relationship with their bank because they haven't blown up. They've been at it for a long time without failure, so they still have a good relationship with their bank. So they're able to use their existing portfolio of assets to lend to get more resources or more funding from. I would say that, and just kind of the deal size. Most of the deals that we do, while we do transactions under our Indigo Energy Advisors kind of boutique transaction advisory firm, kind of from the $25 million space to the 150, $200 million space. Most of the deals are sub $10 million or so. So the lending there's not a really a big lending universe there in that deal space size.